we could be at $200 to match those highs.
Wow.
Real dollar terms. Okay. But right now, I suspect that the first surge that we're getting that has begun, I'm not waiting on any more numbers. In the next 3 to 5 months will get you well above 50, likely into the $60, $70 range. No, the run just began. If you go back and look at a silver price chart, just what idiot chart I call it, because it's just price. Okay. I go back to last May, silver hit a high at $32.70. Okay.
Right.
Then came back up in October, hit $35, dropped. Came back up in March of this year, hit $35, dropped. Okay. But if you draw a line through the May high of last year, you can intersect most of the action, all the action over the last year. Okay. May to May. We've been above it, below it, but it just basically hovers around that midpoint. You had a plunge that cleaned everything out, that fake out sell-off to 2750 that occurred in the first week of April, where silver thought it should be part of the stock market. And no, okay, anyway. Silver, during that year of nothing on price, where it just looked like confusion, on momentum, you get a different picture, which we, of course, include in our reports as our prime focus. You had a downtrending channel on momentum that smacked you in the face. When you looked at it, you said, whoa, if I get above that channel, I'm breaking out. When we came back up to 34.90 a week ago, not back to the 235 peaks at 35.20 and 35.40, whatever they were, just below there, you blew that channel out on momentum. It says, okay, I'm awake again. It's what you've seen for the last year is noise. Me correcting by going sideways. And suddenly you go to 37. Okay, then you back off a bit. Now you're mid 36s. Okay, you're cooling off for a few days. Here's my projection. I think that silver is going to, outpace gold now going forward and regain normalcy versus gold. I specifically think silver could go to, right now it's like 1%, 1.1% of the price of gold. A lot of people measure it the other way, but we do it, we divide silver into gold. I think it'd go to 2% easily. Well, that's almost a doubling the current valuation level of silver to gold. Okay, so that's one background hint. Of course, that doesn't tell you about price. It just says silver's going to beat gold by doubling its gains over the next, whatever, I think in the next 3 to 5 months, silver's going to blow out $50.
Wow.
Those are old phantom highs. And when I say phantom, what I mean is when you go back and look at them, one of them didn't even quite get to 50, but let's call it 50. You stayed up there for hours, not months. Okay. It was like gas, thin air, and immediately relapsed. So really, he wasn't up there for long. And two, when you factor in the decay in the money unit, the real value of the dollar, 1980, 2011, we could be at $200 to match those highs.
Wow.
Real dollar terms. Okay. But right now, I suspect that the first surge that we're getting that has begun, I'm not waiting on any more numbers. In the next 3 to 5 months will get you well above 50, likely into the $60, $70 range. Now, that's not the end of it, but that's the next surge. And I think it will be quite dramatic. I mean, obviously, if you go there, that's a big percent gain in silver over such a small period of time. But I think between now and later in the year, we're going to see somewhere $60 to $70 silver. And again, that's not the end of the move. That's just this surging leg. And I see silver outperforming gold during that time. And I also see the gold and silver miners outperforming gold during that time. Yeah, again, I measure it a different way. I simply divide an ounce of silver to gold, 1 ounce. And right now you're 1.1%. Well, if you go back over the last 50 plus years and look at each year, what was the best reading that silver had each year at some point in that relationship to gold? 2% is almost normal. It occurred like 21 of the last 50 years. Silver's at least been 2%. And those weren't necessarily even dynamic bull trend years. In the more dynamic bull trend years, like 1979 and 80, or 2010 and 11, silver got up to 3.5% and more, the price of silver. Well, just forget the price of silver right now and gold. Just look at that spread and say, well, gee, I'm going to buy something at $1.10 and it's going to go to $2. Okay. That's nearly a double just in the relative performance.
Right.
I say go to $2. That's not even some outlandish norm. That's the norm. 2% is like a median for 50 years. And given that we're in a bull trend, we could go further than that. But right now, I'm focused personally on this particular leg, in part due to the fact I'm also heavily into calls. And calls have time sense. But I do think in the next 3 to 5 months, you'll get that kind of dramatic, I'm out of here move. Not that that's the end of the move, but that is the surge that I'm looking right now. And I think that it's about to unfold. And there's some other events in other markets that are also at what I would call major snap points. Yeah, we plot the spreads on these guys about every weekend report. What we do is we divide the price of GDX, for example, or GDXJ into the price of GDX. So we get a spread relation between the junior miners and the big miners, okay? And since 2020 surged, remember, everything went up big then. Silver went up big, gold miners, gold, et cetera. The relative performance of the junior miners dropped back down and built what, if you look at the spread chart now, forget the price of the ETFs themselves. It built a base. Whereas the performance dropped and then it went boom, sideways. The top end of that base was so definable, an idiot with a crayon could draw it on the spread chart. We broke through that. The junior miners have now broken through, meaning the junior miners are now about to outperform the bigger guys. Now, that could have, some meanings to it, and I don't want to try to interpret it too much, but when money flows into the mining sector and then focuses more on the juniors, it suggests to me that there's some nervous people in the stock market who are not normally gold investors, but they've started to hear about gold going up finally. They got the message. And the miners have done quite well lately, even on price basis to, sort of garner their interest.
Yeah,
I want to buy cheap. They want to, a lot of investors like to buy more stock at a cheaper price. So that means the juniors. So that could be one of the influential factors in that shift in the spread. In other words, public interest in the sector. The other spread that's going to gain, I argue, is silver versus gold. Now, when I go back, now let me give you context on the gold miners versus gold. When you go back, we've run charts on this to the 1980s, and you plot the XAU index, which is gold and silver miners, Philadelphia index. It has a long history. You go back in the 1980s through the present. Between the 1980s, 90s, and into 2000, early 2000s, it was in a spread relationship between 17.5% of the price of gold, dividing XAU into gold to get the express as a percent, and 35%. So again, there's this range. Let's call it 17.5, 35. You lived in it. When we went into the bear market, 2013, 14, and 15, that spread collapsed all the way down to 4%. Imagine a stock that's been living 17.5 to $35, then goes to $4. Okay, it's a wipeout.
Yeah.
But since that late 2015 low, where the miners were lowest they've ever been relative to the mother metal, the spread has upticked a bit and gone into a range. Right now, that spread's at about 6%. Divide XAU into the price of gold. Still very low, but it's firming, meaning it's actually higher right now than it was in late 2015. That means the miners have actually, if you do the math, have gained more than gold since the bear low. Hard to believe because of the tone, the way the price has advanced has been sort of sloppy. But actually, on a net basis, if you bought gold miners then as opposed to gold, you did better than buying gold. Okay, when I look at that spread chart and we examine it technically, you come up out of this base, and I think that's what you're about to do. You're going to go up to next resistance. Where's next resistance? 17.5%. Multi-decade lows, okay? That's just getting back to the bottom end of what had been the reality for 30 years or 20 years. That's a tripling, in the price of miners relative to gold.
Yeah.
Current levels. So I argue not only is silver going to outperform gold going forward, but the miners are going to vastly outperform gold. Outperform gold. And again, that's probably due to sense of growing uncertainty about the stock market, despite the recent teaser rally, which, by the way, is not reflected in the leadership anymore. And people get nervous and they look around and say, well, what's working? And a buddy down the street, he bought gold miners 6 months ago and he's smiling. And they said, well, I didn't believe you, but maybe I need to do that. And so they start to move some of their money. They're not going to buy silver futures, okay, and not necessarily options, but they'll go in and buy those miners because that's a stock, and then some of them have dividends and so forth. So I think that's a reflection. This shifts toward the miners, not only in the cheapness of the miners relative to gold or relative to the S&P even, but in the shift in sentiment that's beginning, looking for a better place to be, lower risk, greater reward potential. I think that's what's transitioning right now. And I think it could be jolting because once an old reality is dispensed with, and the old reality was unreal, I mean, it shouldn't have been that cheap. If you lived in the 17.5 to 35% level, and you go to 4, I mean, it was a nuke event. It's off the page. In other words, that spread alone says you want to buy cheap. It's a good rule. Buy low, sell high. That was low. Okay. And those who bought it there are actually making money. But just to go up to the bottom end of old normality is a stunning move. And I think that move, net price wise, when you look at a price chart of GDX or SIL, the silver miner, or GDXJ, and go back and look at that 2011 peak that they all made, I think we could take that out in the next five or so months. Just as the first, no, excuse me, not the end of the move, just as this statement coming up out of the whole thing. Partly a function, again, of money moving into miners, but also, and more so than gold because of the valuation. And the fact that it's sold out. I think there's a vacuum above us. And I think it'll happen fast where you can't, those who've doubted it for too long and don't act, they should have already acted, frankly. By our reports, it should have been in last March, really doubled up. Then GDX was 31 and a half. Okay, it's now 53 or something. But you don't get a chance to participate. If you wait 2-3 months from now, you'll be chasing it. Okay, you still may make money, but you're definitely not a smart move to get in at that point.